We already started talking before we even came back on the show. Yinka is with us. Well, let me get to this really quickly. Let's look at some. We want talking fintech lending. We want to talk AI really, but we'll just talk fintech lending. Private sector lending to micro, small, and medium enterprises, MSMEs in Nigeria, it's limited. You see the numbers there. Domestic credit to the private sector, 2019, Nigeria just 10.5% of GDP. SSA average, that's your sub-Saharan African average, 45.5%. Let's jump to the next graphic point. In terms of the SME financing gap, 600 billion. SMEs make up less than 1% of 2018 commercial credit. That's according to the IFC. That's the International Finance Corporation and UK Aid. Let's put up the table. As far as individuals, the picture is equally challenging. For men in Nigeria, 55% have an account. As far as a bank loan, just 6%. Nearly 50% have a family loan. For women, 35% own an account of surveys. And it's the same 6% for women and youth, over 40% family. So basically from this table, most individuals in Nigeria borrow money from friends or family or the bank of mom and dad. Enter Blackcopper, which is a Nigerian digital lending startup founded in 2020 to give small and medium businesses collateral-free loans. Well, they ran into some trouble. According to Tech Cabal here, it says Techstars backed Blackcopper set out to disrupt lending. Now it owes investors $1 billion. Yinka Awosanya is with us, research lead at Intel Point. Yinka, $1 billion naira in a hole. How they fall into this hole? What do you make of that story there?
So $1 billion naira, yeah, it's a lot. But then when you look at other figures from other companies in the same sector, look at it, yes, it's a lot, but there are other companies that are even doing worse than that.
Wow.
Yes.
Wow.
So in 2021, for instance, a company recorded about 2 billion in loss, and this loss is now impaired loss, impaired loan.
Wow.
That's loan that you're not paying back. And this is just 1 billion naira. And you look at that, say, okay, yes, well, they're still starting.
How does a fintech startup fall into either 2 billion like you just told me, or 1 billion like Blackcopper according to Tech About? How do you fall into that hole? Well,
so there is the funding gap for SMEs and individuals in Nigeria. Getting loan, we've had reports that says less than 3% of SMEs only have access to loan in the informal sector.
Right.
So now, and yes, you have the traditional banks that don't go into this place, which makes it like enticing for the fintech guys. Okay, since these traditional guys are not going, so
let me go in there.
Let me go in.
It looks juicy.
Exactly, and then you go in there and you see that it's
pretty bad. There's a quote here from the co-founder and CEO of Blackcopper. I think he was talking about KYC issues. He said it's expensive to. Okay, no. Actually, sorry. Before I even get that, I'm jumping ahead of myself. Before I even get the quote, we'll get to this quote in a second. They said that there were issues with know your customer processes. KYC, They said customers were falsifying information. But isn't that the point of KYC?
Yes.
If somebody gives you false information, you're supposed to verify.
That's the point of KYC. But then these guys are not doing enough on KYC as the traditional banks would do.
Isn't that how Champeng Zeng and Binance, isn't that how they got into trouble in the US? Because their KYC, this thing was not.
So they don't do enough KYC as the traditional banks would do. I start banking with my bank today, the traditional bank, they have my salary is domiciled there. In 2 months, I have access to a loan.
Yeah.
These other fintech guys, yes, in 2 months or less, you have access to loan. But then, one, your salary might not be domiciled there.
Right.
And two, you might not have enough KYC to start with. So until recently that you need a NIN or a BVN to create an account. It's just a phone number, you go ahead and create an account.
Yeah.
And average Nigeria has several phone numbers. Right. I just keep creating and just coming up names on my head. Yeah. And then go ahead, register on this platform, take loan, just move small change here and there. Afterwards, take loan and...
All right, no, so thank you for that. In fact, that now leads me to the CEO quote. So let's put the quote back up, where he said that it is incredibly expensive to be chasing down multiple people with tiny little bits of money. So let me read the quote. He said that this is Olumuyiwa Faulkner, co-founder of Blackcopper. He said it is expensive to chase thousands of individuals to return 5,000 naira or 10,000 naira. It would have been more feasible. He's living in a dream world. It would have been more feasible if we were chasing down a few individuals owing us large amounts of money. So, wait, in this, what do you make of that?
So yes, what he's saying is actually it's true because you are actually you have the loan recovery guys that's good. Yes, you are selling this loan today. We are helping recover this. So how much are you going to sell a 5,000 naira loan, a 10,000 naira loan?
Yeah. But you know, it should be easy to trace people now in this day and age, right? I mean, I get the cost.
But if aside the cost now, so if the KYC it's not in place, there's really no much tracing that you can do.
No, you can do, yeah.
If the only thing you have about me is my phone number, so my account is not linked to my BVN, it's not linked to my NIN, which are like the two major ones at the moment. So how do you want to trace me?
Right,
I can just destroy my number and say you want to track me. How do you want to do that?
You know, but I find it kind of ironic that these young, nimble, flexible fintech players can't do a proper KYC, and meanwhile the traditional banks that have been called old and lethargic are the ones who have.
It's a case of knowing. So these guys that we call hold know the system.
Yeah.
So, and their NPLs are very low.
Yeah, that's non-performing loans for our viewers. Yeah. Speaking of which, you see, you're preempting all my next points. This is awesome. It's almost like you have foresight. NPLs. There's a quote from what's her name, Emanuela Monguero. Majero Emanuela. I want you to tell me what you make of this. She says, from the data I've seen of a company with over 300,000 customers, you can expect anywhere from 40 to 65%. My word! That will put you out of business.
A new bank in 2021, the NPL was 69%.
How do you survive that kind of numbers? That's crazy.
And a traditional bank, one of the biggest traditional banks in Nigeria, in 2022, the NPL was also about 5.something%. So their own NPL is usually in single digits.
Yeah, exactly.
When these other guys, it's usually in 2 digits. And towards the end of, like, you're having 60 to 70% NPL.
That is madness.
So there's really no magic you can do to get that back.
But as you said, it is such a the opportunity is huge because they're not lending to the SMEs
even if you are lending, and if you are even going the SME route, that is even larger.
Yeah. Okay,
so the unmet credit for SMEs in Nigeria for 2022 is around 13 trillion naira.
Wow.
Agric is even higher. Agric is about 83 trillion naira.
Yeah. Jeez.
So now in 2022, according to CBN data.
Yeah.
So we have said the 26 trillion was what went to private sector as loan.
Yeah.
For that particular quarter.
Yeah.
Now, can you guess how much went to SME? 26 trillion went to the private sector. Out of 26 trillion, can you guess how much went to SMEs?
$1 billion.
$1 billion. Okay, you're very low. So it's about 90-something billion.
Wow.
But it's less than 1%.
Of course,
it's about 10-something percent.
Yeah.
So there's this gap that these fintech guys are seeing.
Yeah.
Yes, the gap is there. But then it's not a case of why is the gap there in the first place.
Right, exactly. So if financial inclusion was better, if we were lending more we wouldn't have this gap, and that wouldn't. It's all linked. Yeah.
And if you have the KYC that even protects you as a fintech to lend to these guys, yes, you'll be able to close the gap to some extent.
Yeah. So that's the fix. That's how we fix this. We got to improve the KYC. Yeah.
KYC. So everybody coming on board. If you are giving anyone 5,000 naira loan to even pay back the next day, you have to make sure that the person have enough KYC. And beyond that, you are making sure that, yes, this person can pay back.
Yeah.
Because the banks will not give you money. They look at your records. Your salary is the side there, definitely. So they can give you, even giving you money, they are giving you money that, okay, yes, you're earning this certain amount. They can't give you beyond times 2 of what you earn.
Right.
And even the payment plan and everything are into. But these guys just give you loan and then you're just like, okay, yes.
Wow.
So far you are banking with us.
Yeah, and it's okay. Hey, crazy stuff. Yinka, we've got a couple minutes. Let's get to the fun stuff.
Okay.
AI. I haven't had you on the show in a long time. In fact, last time I had you on the show, we were talking insurance. So really not here. You're insurance. You have awesome intel point. So what do you make of what do you make of what's happening right now?
AI.
Yeah.
So it's I would say, good, bad feeling. You are feeling good because of the prospects, what it can do.
Yeah.
But then you are feeling bad of the same what it can do.
Right. Like those two phones that we're talking to each other.
And then, so they
it's
give
like,
you,
where's your phone? Bring your phone. So basically, we could just, it's like
say, and
these two phones,
and they go on and talk
say,
on and on and on and on till you tell them to stop.
Yeah. So our two phones could plot to overthrow us somehow.
So I can give you a book now, say a 200-page book. To read it, you probably take days. But give the same thing in PDF.
And
so then I read it and summarize it
but that's productivity.
That's productivity. But then when you now go beyond that, like say, it's just look as if it's an episode from a Black Mirror or series.
Yeah.
Okay, yes, this thing can now go ahead and overpower us and stuff like that. But that makes it scary for people.
It does, but Yinka, if you think about the progression of innovation, right?
Yes.
The way it goes, isn't at some points do you not get there?
Yeah,
I mean, we can't stay here forever
we'll get there, but then this is the scary part that is making people like, you're looking at it, okay, yes, this thing, like, it's just the scary part that is making people look at, okay, yes, maybe we shouldn't be going this extreme.
Yeah. Look, I get you. I'm with you. It's scary, but it fascinates me to know.
It's fascinating what he's doing. What's
self-driving cars? It's almost science fiction stuff. It's almost science fiction. Yinka Awosanya, always a pleasure having you on the show. Thank you for joining us to talk about the challenges with fintech lending in Nigeria. We got to improve those KYC processes and getting your thoughts on the exciting, scary world of artificial intelligence. Yinka Awosanya, lead research at Interpoint. Thanks for joining us. Appreciate your time.